Welcome back to Views with Views or Jennifer News. This is Jerome Hughes, and if you haven't done so already, go ahead, subscribe to the channel, and click the bell notification so that way you'll be notified of future uploads and updates. So this upcoming Wednesday, August 9th, we do have an upcoming Disney earnings call, okay? So what can we expect for that? Well, so far, the big talk of the town has been ESPN, okay? Now, we also recently learned that ESPN may be on the selling block where there may be some people who, well, I can't say if anyone's interested in buying it yet, but Bob Iger may be selling the company itself, okay? So what can be done with ESPN is a looming question for Walt Disney Company as it gets ready to release its fiscal third quarter results on this Wednesday. The cable sports network, once lucrative asset, has transformed into a cash generator, according to many people out there, who transferred from a cash generator into a casualty of cord cutting as more individuals cancel their cable subscriptions, and the expenses associated with sports broadcasting rights, including continue to rise. Now, last month, Disney's CEO Bob Iger did mention that ESPN is actively seeking a strategic partner and it's open to selling the share of its ownership. The network, which is also owned by Disney, led by Jimmy Pitaro, has engaged in discussions with Major League Baseball and the NFL, and the NBA, as well as the NHL. Now, I think it's also fair to state that there's been a number of layoffs for those who are the frontline anchors and reporters, okay, including former NBA star Jalen Rose, and that's caused a big controversy as well. So a number of people were upset because of the fact that, you know, there were those who were fired, and then there were some of those who stayed behind and who they deemed as woke and everything who continued working. But it was a mixture of people who might have been fired and everything, so who were on both sides of the aisle politically. So ESPN also presents several immediate challenges for what was recently a less than magical empire. Amid ongoing strikes by writers and actors that have halted production in Hollywood, Disney has also stumbled with recent box office disappointments, including Little Mermaid. Now, that should be something that Bob Iger should be paying close attention to because he's the one that's going to be answering for it. Okay, so disappointments include The Little Mermaid, Indiana Jones, Dial of Destiny, and additionally, there's also been a decline in streaming subscribers over the past 2 quarters and a significant drop in traditional linear advertising, causing disruption in the industry. Now, adding to the complexity is a political standoff with Florida Governor Ron DeSantis, creating a serious corporate predicament for the company itself. All right. So we also know that, you know, this has to do surrounding the issues with Reedy Creek, and we've also seen that recently it was announced that Ron DeSantis and the control board from Reedy Creek went on ahead and canceled the DEI initiatives. Okay, so in other words, he's using the board to go ahead and cancel wokeism. All right, that's affecting the company. And it was also stated by the noted Atlantic equities analyst Hamilton Faber, where he said we are growingly concerned about advertising patterns, given the persistently negative viewership trends with an average decline of around 10% year over year. And this is a clear sign of trouble for the upcoming advertising revenues. Now, it's also fair to note that over the past 6 months, Disney stock has declined by 22% to $86.28. All right. And with that being said, we also noticed that Tim Nolan, a senior media tech analyst at Macquarie, has adjusted his price target down by 9% to $94 and has downgraded Disney shares to a neutral rating. He cites various short-term concerns, including weak TV ad sales declines in direct-to-consumer metrics, a slowdown in theme park trends, and ongoing Hollywood strikes. According to the report by the Wall Street Journal, the 4th of July weekend was the slowest at Walt Disney World in nearly 10 years. Now, while Disney's cost-cutting measures might safeguard earnings, the challenges affecting revenue are a bit worrisome that he also emphasized. And basically, the direct-to-consumer segment, which contains Disney Plus, includes Disney Plus, is a big worry, having incurred losses of $1.7 billion in fiscal 2021, over $4 billion in fiscal 2022, and projected to face a loss of nearly $3 billion this year, as according to the gimmick credit analyst David Novosel. Now, Disney is also facing fierce competitions from players like Netflix, Apple, Amazon, Warner Brothers, Discovery, Comcast, Universal, and not Universal because Universal is part of Comcast, and others. Now, basically, Disney has an uphill battle to go. Okay, because all these things were happening all because of the decisions that was made by Bob Iger. The things he approved as well as things he disapproved. Okay, it seems to me like ever since 2021, the price of the amount of money that the company has lost is getting bigger and bigger and bigger. Now, it's still a multi-billion dollar company, but it's a multi-billion dollar company that's also serves as that's basically a multi-billion dollar albatross around investors' necks. Okay, so a lot of people are also wondering what's going to be the next move for the Disney board. All right. And what exactly are they going to say during these earnings calls? All right. So having Iger remain until late 2026 provides investors with high confidence, according to Laura Martin from Needham Analyst, where she said that it provides investors with high confidence in Disney direction for the next 3.5 years, with a reasonable investment horizon. Okay, so she stated that in the mid-July report. Okay, so basically, a few other things to go ahead and expect from the earnings call is a lot of soft questions to be asked, because remember, this is not a shareholders call, where the those who are consumer investors and stuff who call in to ask questions. So that's tough questions. Bob Chapek already had about enough of that when the last time he did the earnings call. But ever since Bob Iger came back, he's been having nothing but softball questions, So be on the lookout for questions on Disney Plus, the projection of what the Snow plans for upcoming films, including Marvels and Snow White, so on and so forth. And also be sure to anticipate any don't expect any questions about what can Disney do to get rid of wokeism, because I guarantee you, with a lot of these investment firms, they're likely leaning further to the left, okay, or they may be moderate left. All right, so let me know your thoughts about this in the comments below. Also, be sure to let me know what went wrong in the video. Be sure to include any additional thoughts that I did not touch up upon in this particular video on this topic. If you enjoy what I shared in the video, go ahead and smash the like button and share far wide across social media. And if you haven't done so already, you enjoyed all the content about there, go ahead, subscribe to the channel and click the bell notification so that way you'll be notified of future uploads and updates. Until then, peace.